Major and minor indicator. The major and minor indicator. Now these indicators are favored among the group when executing trades, as it says above. It's easiest to compare the majors, which are our red and green lines, to the large institutional traders, traders with large accounts, and investment institutions. The gray and black lines, it's easiest to compare these, which are our minors, to the smaller quote-unquote ma and pa traders. Small traders' account size is probably similar to your own account. Now, with the major and minor indicators, in the market there is constantly a tug-of-war happening between the buying and the selling. At times, the smaller traders and the larger traders are in agreement, but also at times they strongly disagree with one another. Now, we do know there are times in the market when one side is considerably weighted in the market direction, meaning that more of the majors and minors are buying, or more of the majors and minors are selling. Now, when there's more on one side, just like in our tug-of-war example above, what happens? The one side gives in, and it causes everyone else to topple over. And that's actually how the market moves. That's how the dynamics behind how the market moves in terms of going up or down. Is there's more buying happening at one time, or selling. And if only we could see which side of the tug-of-war had more people, it would be easy for us to see who would end. So just imagine this tug-of-war happening right in front of us, and there's all these guys from the wrestling and football squad on one side, and then there's all these guys from the IT section, and then maybe the badminton club that are on the other side. It's going to be very easy, kind of a funny analogy, but it'll be very easy without even having to watch them pull to see who's going to win. And essentially that's what our major minor indicator does for us, is it helps us see which side of the rope has the heavier weight so that we can see which way the market's going to go before in fact it does. Now the major and minor indicator is located on green chart 1, and it's the main indicator in the middle window. Now we define the majors as the red and green line pair, and as you can see here, that would be these two lines indicated above. The minors, these are the black and gray line pair, and here is an example of that pair above. We also, in this indicator, have the overbought area, which is the blue line, and we also have the oversold area, which is this red line. Now the top major pair, when we're talking about the majors and minors, the major pairs are red and green indicator, and as you can see here, when the lines are below the red and they cross up, that is a buy signal. When they're above the blue and they cross down, that is a sell signal. A continuation pattern that we often see with these indicators is when the lines continue in the same direction between the red and blue areas. So this area in the middle here where the direction on green continued up, this would be a continuation pattern, which means that the buying pressure is continuing up from the previous signal. We also see the opposite where there's a continuation down. So if the lines come crossing down below the blue, and then we see this very consistent downward movement from the blue to the red. This is a continuation down, which means the market will continue down. The minor pair is very similar in nature. It's a little more laggy and not as reliable. We'll discuss that in just a moment. But when the black and the gray pair, the minor pair, cross down below the red, as you can see here, and then cross up, that is a buy signal. When the minor pair get above the blue, which is our overbought area, and they cross down, like you can see in this example, that would be considered a sell signal. Just as the major pair, when they cross and then continue up over the red through the blue, that is a continuation up pattern, meaning the market will continue that direction. And then the opposite is also true. When they cross down below the blue into the red, and they do that after a possible previous cross, that is a pattern of a continuation down in the market. Now, combining the two indicators gets a little more challenging, but we really start to increase our success by doing this. So as it states here, combining the two buy or sell signals at the same, it would have to be at the same time, drastically increases the strength of the trade success. So oftentimes you'll hear us refer this to a double crossover, meaning the minor pair crosses, the major pair crosses, and it happens at the same time. Remember, when they disagree, that the major pair is more often correct. So really the major pair, which is our red and green line, because it's represented, or it's best understood as our institutional, the larger traders, you have to remember that more of that strength comes in that type of quantity, that amount of volume. And so as you follow this and you see them conflicting, maybe the minors cross early or the majors cross and the minors don't, just keep in mind that the major pair, that red and green pair, is the stronger of the two to follow. Meaning because they have more money, they influence the market more. And so when we see them crossing either in an up or a down direction, they'll have more impact in the market than our minor indicator, the black and gray.